Here at Capcoder, we are delighted to introduce our new and revolutionary all-electric machine. Based on our best-selling Micro Mono, the Micro Mono E eliminates the need for compressed air to operate. And with options such as automatic bottle infeed, integrated filling, and automatic cap placement, it makes the Micro Mono E unique in the industry. Ideally suited for ultra-clean rooms wanting to eliminate any potential contamination of compressed air, or areas where compressed air is not available. The Micro Mono E requires only a standard 13-amp plug to operate. The all-electric version still excels anywhere from small batch work to high-output production. Capcoder are excited to demonstrate their best seller, the Micro Mono benchtop filling and capping machine, with unparalleled ease of use, flexibility, and a multitude of operations. From fully manual to fully automatic operation, the Micro Mono truly does stand on its own. Using the same control system as our flagship Mono, it allows us to incorporate sophisticated technology such as load cells, precision sensors, or tool transducers. It can be integrated with a number of different style fillers, and as well as standard capping, it can accommodate styles such as trigger sprays, presso, and even crib cap. Originally designed for customers that have a frequent product changeover, the Micro Mono takes advantage of quick release tooling, meaning product changeover can take as little as 2 minutes.
Hello.
Hi guys, I'm Lily.
And I'm Georgia, and we are here today from Hanway Associates and First Wednesdays. And we are going to be discussing some of the key findings from our recent report, which we published through the First Wednesdays Network, which was our European Cannabis Investment Ecosystem Report. We were very kindly invited by the team at CBD Live to discuss some of the findings. But before we jump into that, I wanted to give a quick introduction to Hanway Associates and to Lily and I. So the team at Hanway Associates have been operating in the cannabis industry for around 6 years now. Beginning in advocacy, where our team supported the brilliant Charlotte Caldwell in her campaign that led to the legalization of medical cannabis here in the UK. And the team went on to help shape strategies for some of the largest cannabis LPs, who were looking to understand the complexities of the European industries and the fast developing market. And we've been really lucky to work across all of the different segments in cannabis. And to give you an idea of some of the projects we've worked on in the last year, we won one of 10 recreational licenses in the Netherlands for a client. We helped one of the UK's largest mainstream food producers assess the market and plot their entry. And we've helped gain licensing deals for some of our FMCG clients, as well as producing a number of very interesting reports, as one of them that we'd like to discuss today.
Fantastic. So the report that we're going to be talking you through today is part of our ecosystem report series, analysing the deals and investment landscape across all sectors in European cannabis. And we were really glad to have produced this in partnership with the global law firm DLA Piper, the Swedish cannabis fund Annexus, and the London-based investment bank Hanlon Partners. So we were really able to incorporate all of their insights and their expert networks when we were putting together the report. We were also really, really pleased to have access to exclusive first of its kind data from our data partners Crunchbase and from the crowdfunding platform Seeders. And this data went all the way back to 2008. So we do really feel like this is probably one of the most comprehensive overviews of investment in the sector based on publicly available information. But we didn't only want to rely on the Crunchbase data. We also did extensive desk research, and we spoke with over 50 people active across the sector to get their insights and quotes. And as always, we do obviously care about the data and the insights, but we're also very passionate and interested in the visuals and the design. So one thing we really wanted to get across in this report was visually concepting and illustrating the ecosystems and the people and the frameworks that we see developing before us in our day-to-day jobs at Hanway.
Exactly, and we look forward to looking back on the report and the visuals once the industry has progressed even further. Most of the team at Hanway have definitely been around long enough to watch what happens in the kind of global cannabis industry as numbers are overhyped and market predictions go absolutely wild. And we've definitely watched as that bubble has burst, facilities have been sold, net losses are in the billions, and jobs have been lost. So for us, for this series, we're always very, very focused on creating and looking at the cannabis landscape through a colourful yet realistic lens. And that's what we've definitely aimed to do with this report.
Mm-hmm. For sure. And so today we're going to be walking you through some of the highlights from the data and the analysis, and then also touch on some of the notable deals which we found interesting and which we see some kind of themes developing across Europe. So diving straight into our key findings, our analysis of Crunchbase's data and the data inputs which we had revealed the total amount of investment into the European sector across all verticals at 1.2 billion euros. And interestingly, over 20 of that was raised in the first 6 months of 2021 alone. So the pace of investment increasing is really, really obvious through the data. But still, to put things into context, being realistic as we always like to be, this is still small in comparison to North America. So, for example, in January 2021 alone, $1.6 billion was raised by North American cannabis companies. So that's about the same as the whole total European industry from the start. But I think being realistic, investment is really, really increasing. 2021 is on track to see double the investment of 2020. And as we'll touch on, we've seen so much more interest and people are making moves into the market from some of the biggest VCs, institutional players, and private equity firms as well. And also cannabis companies are now increasingly considering public listings as well as just raising privately. The amount raised on European public markets has increased by over 115% since last year. And I think as I'm sure everyone's aware, the Financial Conduct Authority's announcement that cannabis companies could list on the LSE was a really big trigger of this and really helped with the kind of credibility and destigmatization of the industry and the sector.
And how does this compare to the stock market development in North America, Lily?
Good question. I think much in the way that kind of small growth exchanges in North America, for example, the Canadian Securities Exchange, the Toronto TSX Exchange, these really brought cannabis companies to the attention of retail investors over in North America and really helped the industry kind of get the scale it needed to pick up. And interestingly, we do see this happening in Europe, and this is something we really wanted to dive into in the report. We saw first the Nasdaq Nordic exchanges opening their doors to cannabis companies, and the first kind of IPOs through Stenocare and Dancan. But we're now actually seeing this happening in London and in the UK with the LSE, and seeing these exchanges really become kind of focal points and hubs of industry activity across the continent.
Fantastic. So for part of the report, we broke down the total European cannabis investment by investor category to see what stage of maturity the sector is at and who makes up the majority of investment. As you can see, VCs are definitely the largest category, around 42.1%. And between late 2018 and early 2019, an influx of North American venture funds such as Artemis and Altitude began investing in Europe, trying to replicate the successes they had seen in the European and the US markets. And however, we're now seeing more and more kind of dedicated European funds as well. So we've got the likes of Nexus and Ascari over here. And it's exciting as they are definitely able to invest larger amounts than high net worth individuals. And they also are able to kind of plug that middle capital requirement, which we were very much lacking in Europe up until now. We are definitely seeing mainstream VCs actively watching the space. As part of the report, we were lucky enough to interview Will Gibbs, who is principal at Octopus Ventures. He heads up their life sciences division. And it was really interesting to hear in his interview that cannabis is actually a really, really great fit for their hypothesis of investing in taboo industries.
Yeah, for sure. And I think moving on to kind of the next biggest category, we saw high net worths, angel investors and family offices make up around 33% of investment. And I don't think this is too surprising because these groups are known to look for kind of strong growth, and an industry starting from scratch is such a rare opportunity to be able to hit over 100% growth a year that these groups really have been quite interested and often don't have as many hang-ups as institutional players. We have also seen kind of limited private equity involvement. We did some research, and according to PitchBook, there are only 9 deals over 5 years in European cannabis. But I think, again, this is to be kind of expected due to the small scale of the market compared to private equity's typical 5-year fund horizon. So investors are really taking a gamble on how long they are willing to fund losses, particularly in the medical space, until the market really takes off and they can see those returns that they're used to experiencing.
Exactly. And as Lily said earlier, I mean, the total size of the European market and the average transaction size, it does still remain small. And it has mostly prevented institutions and banks from operating in the space. As we're probably all aware, there is no adult market here, which shrinks the potential size of the prize even further. And as a result, we are seeing more institutional involvement in the US. So in the US, there is activity from the likes of JP Morgan, Goldman Sachs, and Bank of America.
And so what do you kind of think it would take for institutions to get involved with a company?
We think that businesses need to be generating either a lot of IP or significant revenues to attract institutional investment. GW, for example, they've definitely perfected the first approach. Even when they didn't have much revenues, they were still able to raise on a high valuation due to their IP. So that is definitely still the area I think everyone should be focusing on if they would like to attract that kind of investment.
Yeah, for sure. And moving on to kind of the activity by the stage of the value chain, we wanted to see which was the most common target for investment. And interestingly, when we were doing the interviews and speaking to investors, a lot of them noted that each area of the value chain carries a different risk and return profile. So the type of investors and groups that are interested in those opportunities does really vary. Formulation and manufacturing, followed by cultivation, had the most investment. We have seen far less money go into genetics and extraction. And this is something that we also highlighted in our last report, the medical cannabis ecosystem, where we noticed there were just big white spaces for dedicated companies to really come in and specialize in these areas. While people were kind of doing it as vertically integrated plays, there's less specialized genetics players, or, well, there's at least less investment going in, which we saw evidence through the data.
Exactly. And we have seen an increasing focus on IP and patents in medical and pharmaceutical sectors. An increasing priority is given to brands and formulation IP rather than companies having control over the whole supply chain in the consumer CBD segment. Building a successful brand with an engaged and organic following is also very attractive. Again, something we've discussed a lot in our last talk here.
Mm-hmm. So do you think Europe does kind of present a different opportunity than North America to specialize in something?
Yeah, I think US operators are definitely forced by regulation in most states to be vertically integrated, but European companies have the opportunity to advance innovations through their ability to specialize and focus. So we are seeing a very interesting opportunity in Europe starting to open up here.
Yeah, I would definitely agree with that. And moving straight on to the activity by the industry vertical, we often see quite a lot of market sizing in terms of kind of revenues and sales about these, but we don't really often see it in terms of investment. So we're really pleased to be able to kind of break this down and share it with the network. We found that together the medical and pharmaceutical sectors represent over 50% of the deals activity. Not really too surprising, seeing as that is what most countries do permit at this point. But I think what came through from the conversations with investors is the ability to kind of gain the first mover advantage just by investing in a medical cannabis company is now dwindling. Investors do now need to look for specialized companies with strong strategies and IP and value creation. So I think that, yeah, there are very strong opportunities in the medical segment, obviously, but we do have to consider that it is currently capped by the nascency of the market, the low patient numbers per capita, and also the kind of long revenue horizons and R&D spend required to play in that space.
And as we can see, the wellness sector is definitely a strong second. We're seeing it doing increasingly well here in the UK, which is great to see, and it is one of the only places where companies can build brand IP and directly market to consumers. There were various kind of regulatory quirks and CBD status as an unapproved novel food that was preventing serious investment from pouring in. But as that starts to shift and novel food confidence kind of increases, we are now seeing, especially in the UK, a real surge in investment. So we saw everybody's favorite CBD drinks brand Trip raise the single largest funding round for a UK CBD company at $5 million, which was really, really great to see.
And then I guess moving on to industrial hemp, which is a smaller proportion than medical and wellness, but still attracting interest. We have seen kind of growing interest among investors focused on sustainable investments and environmental credentials, and also interestingly from blue chip companies who are looking to offset their carbon footprint by investing in hemp. We did see a lot of initial interest in M&A activity as a result of the CBD craze, but as that's kind of consolidated and novel food procedures and so on have been implemented, industrial hemp now, I think, is being seen more as kind of a sustainable approach from kind of credible investors, and a good kind of way for cautious investors to dip their toes into the cannabis sector.
Exactly. And then we have recreational, which sits there at 2.5%. Although there is, really, really strong interest in recreational, and many companies have got plans to pivot their facilities. A lot of brands that we speak to, even on the wellness side, have got potential interest in looking at recreational. But unfortunately, there are currently quite a lot of barriers. The main one here being that the Proceeds of Crime Act definitely prevents recreational investment. It prohibits companies or individuals from spending earnings that have been raised through operations contravening UK law, even if the activity was carried out legally in the other country. And this is because, unlike most other national laws, the Proceeds of Crime Act has extraterritorial effect and covers operationals carried out overseas.
And I think in terms of how the kind of recreational opportunity compares to the medical market, I think there's already proven established demand in recreational, which just doesn't exist in the medical sector. So from the medical sector, patients, doctors, infrastructure has all had to be built, developed. Whereas in the adult use sector, the consumers are there and they are currently consuming. And just to put some sort of a scale to these figures, the Dutch controlled coffee shop experiment, moving a select number of the coffee shops to licensed legal supply, that experiment is 4 times the total wholesale market size of the whole EU medical market. And that's just for the initial areas that are involved in the experiment, not if it was rolled out across the whole country. So I think you can see the scale is absolutely huge, and something that we're looking forward to seeing how it plays out in the future. And then in other areas of Europe, interest in the Swiss pilot is also gathering for the recreational pilot there. And interestingly, the Federal Office of Public Health isn't permitted to give funding for those canton trials, so they will need self-funding. So again, quite a lot of interesting opportunities going forward in the adult use sector. We're now going to take a look at some of the insights from the data analysis and some of the interviews with the sector experts, and really pull out some of the key kind of themes and trends that we've seen throughout the report.
Yeah, exactly. I think one of the key themes for the report was obviously the increasing amount of M&A activity. Even after publishing the report, there's been a number of huge acquisitions that have taken place, both here in Europe and across the Atlantic. One of the key acquisitions that we profiled was the Curaleaf acquisition of EMMAC for $388 million in March 2021. They acquired them for a number of reasons, but mainly for their European assets and the potential future recreational market on the continent. They actually acquired a complete European strategy for 2.8% of its market cap, according to the MSO's chairman.
That's just staggering really when you think of it that way. Why do you think it is kind of attractive for MSOs to be pursuing European strategies?
I think operating in Europe is a capital light model compared to operating across a similar region in America. And due to the MSO setup requiring assets to be replicated for each state, whereas in Europe, you can just use the same facility to serve multiple markets.
Yeah, for sure. And I think that kind of leads us onto our next one that we did kind of analyze in the report, which was the Tilray-Aphria merger at a value of 3.8 billion, one of the largest deals of the year. And this was kind of predicated based on, well, comments from their CEO. This was predicated based on joining their key European infrastructure and making a much stronger European player. So the combined entity's assets now include cultivation in Portugal and Germany, distribution through CC Pharma, which Aphria acquired, and distribution was something that Tilray previously lacked their own of. They had to use partners, a supply contract for the French pilot, and the only medical cannabis product approval in Portugal. So merging definitely really strengthened their position, and I think their assets do really complement each other in this case. The next kind of big theme that we saw throughout the report was that M&A activity and investments from blue chip corporations, from kind of listed mainstream companies. It is really de-risking the sector and destigmatizing it for others to follow in their footsteps. A key example of this is the Jazz Pharma acquisition of GW, 7.2 billion. Really did kind of set the benchmark for mainstream acquisitions in the European cannabis sector. Not only did it kind of demonstrate the potential for exits to big pharma and inspire other pharma players to look into this, but it does kind of just prove the long horizons for R&D. So it took GW 20 years to go from a small British biotech to actually having the data and the IP, and even still now their R&D spend accounts for something like over 1,000% of their annual revenue. So again, really proving that there is value in investing in clinical trials and evidence, but that these revenue horizons are longer.
Exactly. And we have also seen 2 notable North American investments made by UK nicotine companies, with both involving technology in addition to cash. LSE-based British nicotine giant Imperial Brands invested $123 million into Canadian cannabis producer Auxly. And another UK-based multinational British American Tobacco invested £126 million into Canadian cannabis producer Organogram. This does definitely raise ethical questions for some. while others do note that it does continue to contribute to the mainstream of cannabis by FMCG companies who do typically have conservative shareholders. But as we are seeing, we've spoken about this so many times, but multinational FMCG corporations are moving into the sector quickly, and they are bringing with them cash, but also consumer insights, vape technologies, and robust retail relationships and supply chains.
For sure. And I think bringing things back a bit closer to home, we were really pleased to see that the UK was actually the centre of European cannabis investment activity, with over 50 million euros raised on London's public markets in the first 6 months of 2021.
Exactly. It was home to 69% of public deal activity in the European cannabis industry, and over 42 million euros was raised in the first 6 months of 2021 through private transactions in the UK.
And I think it's kind of great to see, coming from where we were in 2001, London's AIM exchange was home to the earliest European cannabis IPO, which was GW Pharma, to now seeing the LSE kind of welcoming cannabis companies. And we've seen the likes of MGC, Cannabo, Oxford Cannabinoid Technologies, and Cellular Goods have really, really successful oversubscribed listings and really capitalize on the retail investor excitement. And I think, there's a lot of things that attract people to the LSE, the exchange's credibility, kind of deep pools of liquidity in the UK. And we have seen a lot of upcoming interest. We've heard the likes of Northern Leaf, Yuma, and Canary are all kind of eyeing a main market LSE listing too.
And now we are moving on to crowdfunding, which has been a bit of a challenger to the investment landscape. When Lily and I sat down with Mark from Cedars for an interview, we were very shocked to hear that cannabis was actually the #1 performing category on Cedars in 2021, which was very exciting for us, not just as a great headline stat for the report, but also demonstrating how seriously cannabis can be now taken. And I guess it is really, really, it is evidence of a strong demand among retail investors to invest in the European cannabis companies. Every single cannabis campaign on the Cedars platform has fully met its target and raised the amount.
And I think aside from kind of the financial upsides, I spoke to quite a lot of the companies who've done the crowdfunding campaigns, and they all said that they saw it as a great way to kind of garner publicity and really build brand evangelists from the community, from their loyal consumers, and allow kind of patients and product consumers themselves to actually invest. And I think we've seen this work well in other industries with the kind of craft production and small scale, getting to really know your consumer base.
Exactly. And thank you guys for listening to us give some of the key kind of findings from the report and our overview. Lily was the leader author of the report and was very much involved in pretty much everything from the planning to the production. And we were also very excited to take the visual concept, as Lily mentioned at the start. If you have a spare 5 minutes and want to have a detailed look through the illustration, you'll start to see some hidden references to some of the different deals that took place. So definitely something to do on a rainy afternoon if you have the time. We're now going to open up to some questions. We have a few minutes left of the talk, so if there are any questions, I can see quite a few, so I will pick a good one. Let's go with this one, Lily. This is a good one for you. Anonymous attendee says, glad to see you both back at CBD Live. Always a fun webinar. We are seeing more cannabis companies being listed on the stock market. Is this an indicator that the industry is growing?
I would say absolutely it is an indicator that the industry is growing, but also not just that, but that it's being actually taken seriously by institutions and by authorities. And I think what it does really bring is it brings credibility, a kind of a stamp of approval for companies. The fact that you've listed on, say, the London Stock Exchange is a huge sign of credibility. It means your accounts have been audited, you meet all of the criteria, and it is really just kind of a stamp of approval. So I think it is obviously a sign that the industry is growing, but also that it's becoming more and more kind of accepted, and it can't really be kind of ignored anymore. The kind of average ticket sizes and market caps it's something that the LSE and other exchanges now can't actually ignore. So yeah, for sure, I would say it is a sign that the sector is growing.
Wonderful. Another attendee says, medical cannabis seems difficult to get hold of in the UK. Could you explain why it has 38.5% activity by industry vertical?
Mm-hmm. So I think kind of the two issues here, we do obviously have not quite the amount of access in the UK that we would like. The NHS currently only prescribes a very, very limited number of kind of licensed medicines to a limited number of patients, but we have obviously had the rise of private clinics in the UK, really boosting numbers to around 5,000, I believe, now kind of active patients. The reason why kind of medical was around 30-40% of activity, I think it is simply because this is what most countries in Europe, if they've got cannabis access, they will have medical cannabis. Less so have CBD, and if they do, they often have some sort of a regulatory quirk, or there may be an issue in ingestibles, say novel foods, or some sort of a restriction on the source of CBD, whereas medical, I think it is obviously accepted by government. They know that this is prescribed things. It's been allowed to kind of develop at a higher stage than kind of wellness and the other sectors so far. And I think also interestingly, in terms of like the state funding and kind of state support accelerator schemes, I had a look through all of the kind of ones that I could find in Europe, and the vast majority of those were given to medical companies. So I think that kind of demonstrates where the head is still at among some of the kind of institutions. Medical is kind of the main one, which they see the promise in at the minute. But again, as we touched on, we do think this is going to change.
Wonderful. That was a great answer. Thank you, Lil. And then I'm going to end on a very appropriate question. Someone has asked where they can find out details on what Hanway and First Wednesdays do. So you can head to our website, Hanway Associates. We are a European consultancy, and you can also become a member of First Wednesdays, our European network. We're at almost 5,000 active members, and it is free to sign up. And if you sign up, you'll also get access to our other reports. So we did a report last year where we mapped out the UK CBD industry, although I'm sure there have been hundreds of brands launched since we did that wonderful mapping exercise. And we also produced a report last year in partnership with the Ministry of Foreign Affairs in Denmark, where we looked at the European medical ecosystem. Again, really interesting insights, some really interesting models which have been profiled. So I would highly recommend having a look at those. And we are definitely in talks and currently planning our First Wednesdays in real life events. So we will hopefully be able to give some more information on that very soon. But we are definitely keen to get back to in real life events. So that is definitely something we're working on. I think we've run out of time for any other questions, but our email address is also on the bottom there, info@hanwayassociates.com. Feel free to get in touch with Lily and I over LinkedIn as well. And yeah, thank you so much for coming to our talk today.
Mm-hmm. Thanks so much for having us, guys. As always, it's a pleasure speaking to you all today. Thank you. Bye.